spotted as a fake breakout. How do we know it's a fake breakout? We have a candle basically which closed with the wick over here. It's not basically fully on breaks, and we can see that the price is still reaching out to the demand area, which over here is marked over here. And when in the demand area, we see how the price slowly start to break this pattern, started to grow in towards uptrend. And we see right here we did the same methodology, basically took the low point of the wick and trying to connect it with the wick once more, and different wick once more. Basically we see the price right now hit it for the third time, understanding we're coming from a demand still, so we are in a possible position to get to a long position in order for us to understand that when we can head with this price action. So if we know the total trend of the day is still an uptrend, and we know within the 15 minutes interval it changed, because we're in the 15 minutes interval, we already started the category of day trading. So within the day we can seize the opportunity right here using our indicators and supply and demands and the trading line to support our decision making. So we did not still break the wick, the price did not still break this line. As long as it doesn't break this line with a high validation, we are still in a uptrend, a total uptrend of the day. So obviously we're gonna favor the long position of the day. So we are now at 912. It's still, we're working the night profile. We're gonna look now for the night profile. We'll see how the night profile looks like. And it's going to show up in a second, and there's no surprise that we see basically that even so the price still not crossing this line. We see how it's perfectly sits and situated on the low value area, and if we're on the low value area, it means that the price over here decided that it's unfair low. It's not fair to trade in this area. We're going to try to achieve the trade in a different area. We have a short dip on the top. It means that the price can expand upwards, which basically also give us support to our decision making. And basically we can enter a long position from here, right here, basically from the low value area. We can take one position over here and extend it towards upwards to the next demand area, capping on almost $2,000, not almost, actually, yeah, $2,000, and risking as low as $210, which is a very good ratio. And basically we have all the support that we need in order for us to execute this trade. Of course, the market will always say speaker's last thing is last word, but we are speculators, and we're working with, as I mentioned before many times before, a trader is not a real trader, basically is a risk manager. And if you calculated the risk accordingly and you're risking only $210 and creating $2,000, basically it's the ratio is 1 to 10. For every dollar you put at risk, you will gain $10 back, which is absolutely amazing ratio when you day trade. The day trade should be at all minimum 1 to 2. I mean, for every dollar that you put at risk, you take in $2 to your pocket, and it's a very good ratio and healthy one. So we are in favor of this position today. This is one of the positions